Hey guys, AKIL'S here. Welcome back to the Trading Edge video, your weekend look around the markets where I share with you some of the best trading opportunities that are on my radar for the week ahead. I've got 6 opportunities to look at today, so let's hop straight in with the euro dollar. Euro dollar is doing a few things here, and this is going to be a continuation on a video we did a couple weeks ago. But currently, the euro dollar has come into a previous level of structure. Look left, structure leaves clues. And we put in a classic pattern formation called a double top. If I take my little arrow tool here, if I can ever find it, you're going to see price action rallied up from about 103s. We then came to a stopping point at structure. Look left, structure leaves clues. We then kind of fake moved off of it before retesting it again and holding. So when we see this type of V-shaped formation where the market goes up, it goes down a little bit and then comes up and holds again, we call this a double top. And you can see that we ended the week with 3 bearish days off of that double top. Now, the double top is done. It's not a good place to enter right now. So a secondary opportunity to look to get involved would be looking for something called a 2618 or looking for a break of that V point. So if we go down to a lower time frame right here down to the 4-hour, I'll show you the area in which I'm paying attention to. I'm going to steal this line right here and drag it down. And if price action can violate this level, meaning break and close below, what is this right here, 107.62s, then I would expect price action to go lower. Where would I expect price action to go lower to? Well, the first stopping point would be around here. And let me just zoom out real quick. Yep, and look left, you'll see bang right at an inside level of previous structure. So good opportunity for potential shorts here on the euro dollar if we do violate that level. And I'll tell you what, that goes hand in hand with kind of the change / non-change in monetary policy that we just had. If you guys remember, last week was a massive week as far as monetary policy across the board. We had what? Bank of Japan on Tuesday night / Wednesday morning. We had the FOMC, so here in the US on Wednesday. Then we had Swiss National Bank and Bank of England on Thursday. And particularly with the Bank of Japan, or not, the Bank of England and the US, we had a situation where we didn't have any change in policy as far as the interest rate number, but we did have a change of opinion. So we may be seeing some follow through off of that. Not going to go into details about that right now, but if you want more information on kind of what that means or what exactly happened, make sure you go back and listen to the last Trading Coach podcast episode where it's called like Reading in Between the Lies, right? It's a funny little title because I thought it was funny, but check it out. It's short, sweet, and explains everything that happened this past week as far as the fundamentals go. Next up is going to be the pound dollar. Pound dollar is setting up something similar to what the euro dollar set up a few weeks ago. It is a deceleration pattern in the form of a rising channel. So this thing right here, you can see price action spikes up at a very high rate or rallies up at a very high rate. And then we kind of just drift off to the side. Again, this is no surprise. We had Bank of England, we had FOMC rates, so no surprise that the market slows down. But just like we did with the euro dollar, we can look left to see if we're at any relevant level of structure. I spy with my little eye a decent structure level right here. And for you guys that are channel traders, I'm not a trend line guy myself, but if you were a trend line guy and you were to connect these dots, you can see that we just had a violation of your lower trend line, which would confirm that rising channel, right? So there's not a lot of room to the downside here, in my opinion. I would only be interested in, gonna steal this line again, only be interested in a move back down to the bottom of this channel where we first started. If you want to be a little bit more aggressive, maybe this inside level of structure right here, but not as far as say the euro dollar. But what you would be looking for is either a pullback here on the 4-hour, right? Something that goes like this, and then like that. Ignore those noises, they're weird. Sorry, all day at a kid's soccer tournament. I'm running on E and it's too late to drink the coffee. Or if you go down to the hourly, you can see that we already had multiple pullbacks, right? So our break was here. We retested structure once again. Look left, structure leaves clues. We then put in a fresh break to the downside and we pulled back again right into that previous level of structure support, which should now act as resistance. And again, you can see more structure over there. We also ended the week with a lower low, lower close candlestick formation, meaning a break and close below. So if you're an aggressive trader and let's say you're ready to get involved in this thing and you don't want to wait for any other type of confirmation, and that market sell right here stops above the highs right there, at least at minimum above those highs, and then a move either looking for a retest of lows here, or if you're going for that area that we looked for originally, that's going to be right down here at about 128.64. I'm just curious real quick, I'm doing this for the first time. It looks like we're going to have Fibonacci confluence down there as well. So if I take my Fibonacci extension tool from my previous swing high to swing low and back up, yep, we're going to have a 127 right down there as well. I'll just do an AB equals CD for blanks and giggles to see if that lines up too. Harmonic pattern, boom, look at that, right at that area. So pretty confident that if we continue lower, this is going to be the place that we should continue lower too. Euro yen is next, and Euro yen has been somewhat of a dead pair. You can see on the chart in front of you, we have basically been going sideways for since August? So the last, 8 months? August, September, October, November, December, January, February, March. Yep, 8 months. And we've been bouncing off different levels of support and different levels of resistance, and really nothing has changed here. Our most recent move was a move up into a previous level of resistance. We got rejected, we got engulfed, and we came right back down to an inside level of structure, wrong tool, inside level of structure support right here. Here's what I'm interested in this kind of short-term consolidative play here. You can see that price action had made this series of moves, right? We shot up, we retrace, we shot up, we retrace, we shot up, we retrace, right? Catching on to the theme here. Then we put in this nice little double bottom, right? So this is going to be the opposite of what I showed you on the euro dollar. In the euro dollar, it was a double top where price went up, got rejected. This time price comes down. We get a pivot point right here. We get a short-term move up, and then we come back to test that level once again, and we hold. Now, this could be an at-market play as well if you're an aggressive double bottom trader, or you can look for something called a 2618, which is a more conservative way or a second chance at entering this double bottom. So what happens is this. Basically, price action comes down, creates our double bottom. We need to take out these highs, so take out the highs of the V point right here. And then there is an option to buy as you take out the highs as an aggressive breakout trader. But a true 2618 trader is looking for a pullback back into this area, right? That way we get a little bit of a cheaper price here. And then looking for a run back up. So given the consolidative nature of the euro yen, seems like a decent play. The dollar yen is next. Dollar yen was one of my favorite pairs this week. I had a great week of trading. It was very slow, boring, but went 3 for 3 and made a lot of money. So that made me excited. But with a nice little pattern play here, I'll draw this in just real quickly to give you a recap. We had an X to A leg like this, A to B, B to C, C to D. We teased us a little bit, right? Came back up, whoop, and then dove down to smash target. So this is one of those things where patience pays. We've had so many episodes here on the YouTube channel or in the podcast about kind of being comfortable in trades, not freaking out, right? And it's very hard for a trader to see like the market come to their entry, right? Rally down about 80 pips and then go all the way back up to break even and have to sit with it to carry down again. What most traders do is they take out their trade for break even, or they take it out for a little bit of profit and do the little whew, something is better than nothing thing. But for traders who were able to be brave, stick to their rules and stay in this trade, right? I'll show you the exact kind of measurement here. As you see, our 127 is going to be exactly where I put it at, right? We're looking at a move of, instead of cashing out at 80 or cashing out at break even, it ran all the way down to target 1 for about 120. Nearly missed target 2s for you guys that are target 2s takers, but target 2s takers, that's a tongue twister. That stinks, but stopped out for breaking on the remainder of your position. Now, there's another one happening here, either on the 4-hour or you can go down to the hourly, whatever is your preference. And I'm going to start by taking this move right here. So the decompletion of my previous pattern is going to be the starting point for this new smaller pattern. This is going to be our X to A leg. So swing high to swing low. Our first retracement up here is going to be our A to B coming past the 618, so putting us on Gartley alert. I'm going to take my Fibonacci retracement. I should be drawing these things in for you, right? X to A. I know there's a tool. I like doing it manually, right? It keeps the brain fresh. X to A to B, B to C right here. So I'm going to take a Fibonacci retracement from my B to C, and these are called advanced pattern formations, by the way, harmonic patterns. We did a great presentation on this on the workshop last week about the origination of the patterns and how they got started. And long story short, the cool thing about these things are that they existed in the market, right? These are all patterns are based off human behavior and crowd psychology, but these things existed in the market well before technical analysis was even here. So if that doesn't show you how powerful they are, I don't know what will. And that's to all the naysayers out there that think it's a bunch of voodoo magic and junk. Explain how this stuff and many other of the classic pattern formations worked before we even saw charts. Yeah, leave it in the comment section below. I'd love to have the discussion with you. But our C leg comes to our 618 here as well, giving us a valid C leg for a Gartley, and we're looking for a D completion, which is going to be very deep, right? You guys remember this is one of my favorite Gartley patterns, the deep Gartley pattern, right up here. Nailed it again, right? So this will be a potential bearish Gartley where you're looking for a sell in this area. The kill zone is from our 127 all the way to our X leg, so you know the risk reward is going to be great. So put this on your radar. Also, this is one of those situations where this pattern can also be present on the hourly. And if you guys saw the podcast episode, it was a video episode, so it's here on YouTube as well, called The Most Important Indicator, or My Most Important Trading Indicator. We talked about how I use the ATR for stops, and we spoke about how going through different time frames could make a massive difference in your stop loss placement, which can have a massive effect on your overall risk profile. So for you guys that want to learn more about the ATR and how I use it for stop losses, make sure you go back and watch that video as well. But decent opportunity either here on the hourly or the 4 hourly on dollar yen. Next up is going to be another advanced pattern formation or potential advanced pattern formation here on the dollar Canada. Dollar Canada has been in a period of consolidation. You can see that we've had a bullish run up, and then we've pretty much been consolidated inside this range. If you go down to or up to a daily chart, you'll see this little wedge pattern right here, which, by the way, wedge patterns are neutral patterns. Now, in the past podcast, we spoke about a bigger advanced pattern formation. You guys should remember that is here, X to A to B, B to C, C to D. We have another smaller one as well, X to A to B, B to C, C to D, right? A whole bunch of stuff happening in this consolidative period. I'm here to bring you one more even smaller one, and it's going to be another potential bearish Gartley pattern. I won't go through the whole deal. I trust that you guys know patterns by now, but we're looking at a move that starts right here, X to A to B, B to C, and then a CD completion right here. And again, we've been in this period of consolidation where a range has been getting smaller, and this potential bearish move would fit right inside that weakening or that in closing range. So keep an eye out for dollar Canada as well. Lastly is gold. Gold has been on a bull run, but we've had a little bit of a weakish week. There we go, weakish week, Akil. That's a new one. I like it. You can see here on the 4 hour, we've kind of had a little bit of a rotation, a fake rotation, where overall the trend is still very bullish, but recently we've got a little bit choppy, right? We've had a bullish move, then we kind of consolidated here, continued up, kind of went sideways for a little bit, continued up, but with not a lot of pressure, a very small extension here. And then we kind of chopped around here for a little bit, little head and shoulders action before breaking and closing below the lows here. Now, you would see break and close below and you'd automatically think bearish move, but not so fast, my friends, right? Look how this candle ended. We see this candle with the long tail to the downside, and what this tells me is that there was a little bit of a bullish rejection, meaning that the bears pushed this thing down, boom, but then the bulls were able to beat it back up. And the question is, where did the bears push it down to? Where were the bulls interested at? Everyone say it with me now. Look left, structure leaves clues right to our previous level of structure. So I wouldn't be too convinced that we're likely to see a continued move downward, seeing how we've already come to the place that I thought we were going to come to. Now, if we head down to the hourly, here's what I'm looking for is a very short-term move. If price is going to continue up, we are going to continue up to this level most likely. And I say most likely because I just caught myself trying to tell the market what it is going to do. And if I've learned anything in my 18 years of experience, never tell the market what it's going to do. That is the quickest way to lose. Remember, the market will do whatever the hell it wants whenever it wants to do it. And if you tell it to do something, it's like a kid. It will usually do the opposite. So if the market wants to go higher, it will go higher to this level most likely. So this could be a nice little day trading opportunity, just trading this continuation from here to here. If we can end up violating this level, we'll come back and do analysis on that, but that can open up another opportunity to the upside since we'll be back in kind of that bullish rotation. So keep an eye on that as well. Again, some of you guys are looking short. You're saying, yes, Akil, return to previous structure, look left, structure leaves clues. We can look for this as a short. And normally I would agree with you if the move wasn't already made. And that's the biggest benefit of doing top-down analysis is you can kind of see a bigger picture, and that bigger picture often gives you clues that you might not see if you were just looking on the smaller picture. Hit that like button before you go. Be on the lookout for tomorrow's video episode of the Trading Coach Podcast, where we're going to talk about drawdowns and how to survive them and not dig yourself into a deeper hole where you blow all your money and go crazy. Yeah, it's an important one for everyone.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.